Hello, Face. How are my trading warrior brothers and sisters today? Today is the first day of May. Here's my expression for May. In May, we will increase our pay, which means what we're going to pull out of the market this month. Okay, so let's have a great May, everybody. Who's with me? Give me a Y. So we have to have the attitude that we're going to have a great May. In fact, how about having a good quarter during this month? Okay, so I know the team and I are going to do our best to make that happen for you. But keep in mind, no matter where you are, who you're following, that no one else can click the mouse for you, just like no one could click the mouse for us. And we're all captains of our own ship. So let's have a nice voyage during this month. And we're going to do our darndest to make sure that we get to our destination and that it's a cruise rather than rough seas. Okay, so with that being said, I want to talk a little bit about crude. Maybe one of my partners could fill me in on the details, but 2 weeks in a row, what should have been extremely bullish news in the crude, and rallies are not holding. So last week was the news about Iran, right? And we got a new high, but it gave it all back. And now things are really heating up in Venezuela with this coup being in place. Maybe, Stel, if you could hear me, I heard that there's potential military movement about no-fly zones, etc., over the area. Anyone out there, one of my partners, know what's happening in Venezuela overnight? Okay.
You know, Coach, I'm not following. So I'm not following crude right now. So.
Oh, okay. But I've heard that it's escalating, and also heard that Maduro was going to leave, but the Russians convinced him to stay. So, you know, what bothers me about Venezuela is not what's happening domestically. It's the international players that are lining up against each other with China and Russia, supporting the current leader, and we're supporting the other leader who said the election was stolen from him. So anyway, the point being that Venezuela has more reserves than Saudi Arabia, that I've read before. So it's a big prize, and their infrastructure is deteriorated under socialist regimes. So the big powers want, you know, they want to come in there and be their partners and get a piece of that action. And so, you know, I'm not saying that crude can't rally. I mean, there is potential after this big break. I took yesterday, I said turn around Tuesday short. It worked. I day traded it, got out early, but it is possible that we could still test 61.8, you know, that we have this and then a higher low and then, you know, one more rally. Also, we have the Fed today. So I'm not real big on being positioned anything other than very lightly and trimming my book into the Fed. Really, I'll tell you how I feel about this. When I was at FX Street, it was an NFP day, which we also have this week. And someone came up to me or texted me. We had a weak number, and they said, Dale, I bought the euro before the NFP, and the euro rallied 100 pips. And my response to that was, good guess, because that's all it was. It was a guess. It's not trading. Yeah, you can get lucky, but you could do that in roulette at any casino, betting red or black. So I think what pros do, besides holding some positions that they don't want to let go of just because of a red event, because they have a longer term perspective, that a lot of pros would rather react to the reaction than try and predict it and position themselves in front of it. So that's how I feel about today. But I think it is a market tell with everything that's going on in the energy complex, with what we're doing with Iran and what's happening in Venezuela. Why aren't we $70 right now? So that's my view. The dollar, you know, people are asking me about the dollar. It's still an I don't know for me. You know, this is definitely was a false breakdown, and maybe this is a high. But I keep thinking that maybe it's only a correction because of how bullish everyone was going into this breakout. So if it declines and breaks from here, I would say back under 97, you have a problem. Okay, but I looked at this little green line, which, oh yeah, there, I could extend it now. That we had this little breakout here, and we're right there. So we'll see if we hold it or not. RSI. So, like I've said on several occasions, early in my career, I'd feel uncomfortable saying I don't know, but it's really wisdom to admit it instead of just feeling like you have to entertain your crowd and come up with something. And I can only say that because I used to. So that's an old paradigm. It's gone. I'm not using it. We had a big recovery yesterday in the S&Ps, and the ever-ready bunny made a new high. It's making new highs today. It's a 1 millionth divergence in the S&Ps. The only comment I could say is with the S&Ps making new highs, and it hasn't happened yet, NASDAQ hasn't. I'm not saying it won't, but look at this 4 hour. Okay, you get many more 1 hour divergences than you get longer time frame divergences. So a new high in NASDAQ on the 4 hour, no way it's going to confirm up here. And now we're in May, and I think within, you know, maybe it's this week, that sell in May and go away might work. You may not catch the top, and you may not want to get short. But booking, if you're long, or say, for example, most people have retirement accounts, they have IRAs, you know, why not take something off the table? Yeah, Yoda said that. Why not take something off the table? Or, you know, why not buy some fire insurance? Okay, so when you buy insurance, you're hoping you don't collect on the insurance. You don't want your house to burn down, right? Need a China deal. Okay, that could be true, Tiana. Good read. That's possible. But you want to own some insurance and hope you don't collect on it. But if there is a fire, you're covered. And with the VIX trading under 13, it's pretty cheap. So S&Ps are trading at new highs. NASDAQ threatening. Dow's not there yet. But look, VIX is not making a new low. If we penetrate 14 on the VIX, 18 is next. And then if we get through 18, why not? See a lot of stuff right here at 16. So I don't have the correct fibs right now because that wasn't the low. But here it is. You know, why not 38% back is 20, halfway back is 23. And I'm not talking about a crash in the market, just a fib retracement in the market, which hasn't happened. Okay, so I'm not, you know, one of the super bears saying we're going to 1900 in the S&Ps, but why not 2600 or 2700, the old lows before we had this blow off that I consider that we're already in a blow off. I know that the classic blow off would be something like S&P's up 25, 30 handles and then closing 20 lower. So, you know, they don't always top like that. Okay. It's classic when it does, but things aren't always classic. And I just wanted to touch on the copper again because it tried to rally yesterday and it got to the 50% retrace level almost off this break right here. Okay, so 292. Look at this. Okay, so I've been bearish from the 3 drive up here, And this was a pretty weak rally. S&P's making new highs. Risk on. China. Oh, China's in great shape. You know, they're recovering. I talked about this, you know, to Jim Welsh and as yesterday, and said, you know, what I'm seeing in copper and crude does not bode real well for a recovering China. And this is pretty negative action in copper. I'm very bearish copper. And as I said before, you know, and copper is about construction. Gold's about destruction. Copper's about construction. So to me, it looks like we're going to challenge these lows before the recent rally. And, you know, here's your next stopping point. You could do fibs from here to here and find retracement levels. But I actually believe if you look at the weekly, that, you know, there's a lot of empty space between here and 260 after we take out this low. And what's going to happen if we take out this low? I mean, even if you just measure this, 254 to $3 is 46 cents. You know, that's going to take you down towards 210. You know, back towards it. You know, and it's been here before. Let me tell you something. You guys know I'm an old guy, right? I remember copper trading at 60, 70 cents. So everyone goes, oh, $2 copper. That used to be a tremendous price for copper. See how things stealthily can change, and what you used to think was cheap, now $2 copper looks cheap. So anyway, that's a possibility, and I just think the signals you're getting in copper and crude are not real bullish signals for the market. And also, yields are falling, and I think we had the inversion on the yield curve. I think it was last week or Monday, and here we are again, 250, you know, little bounce. You know, we get under this weekly moving average. I don't know, maybe we'll challenge this. But I've been saying for a while here on Face that we needed one more low under 235 to have a third drive. Here you go. Here's one. This is your daily on yields, and here's a 235. And so that's two, and it looks incomplete to me. So I think these lows are going to give way. And ADP reports in 4 minutes. So I don't know. I could keep talking, Blake, if you want to just trade it. It's up to you, buddy. Or you could come on and trade it live.
No, it's fine. Actually, I should probably, you know, cover that.
Okay.
So thank you very much. Let me go ahead and pull it on over here.
And I really like our charts of the day that keep the confusion away. And you know, I think it's a great thing you do for, you know, non-subscribers, putting it out there on Twitter and everything, and sharing your work. You have a giving spirit, Blake.
Well, thanks. I'm sorry. Can you see my screen?
Yeah, got it up there, buddy.
The euro?
Yes.
For some reason,
the 4 hour chart. 4 hour.
Yeah. Thank you. I'm looking at one of my other screens and it shows that I'm short euro, but I'm not, which is weird. So I have like my trade station, which I just squared it up so there's nothing in it. It looks like that. I just took off I manually have to input my trades, but I have another system where I can actually see what positions I'm in, which is completely different. And it shows me with no positions, but my trade station had me with a position, so I'm not understanding why that happened. But anyway, okay. So here we are with the euro dollar, and we're going to just talk about this really quick. I know we're 1 minute away. Actually, you know what? I'll talk about it afterwards, but you can see how pivotal that area is. So let's pull up the numbers here. I'm not really so concerned about the ADP today, but we're looking for 180,000. So let's see what happens here. 180,000. Okay. Dollar yen should be the responsive currency. Hold on. Let me get over a 5 minute. Here we go. We got about 10 seconds now. Strong number, 275. Holy cow, 275. That's a good number. So that's So the thing about you know, you that we have, and even the revised number was a good number.
Yeah, dollar didn't really hold gains that well so far.
Hold on, I'm just kind of. So that was a good number. Revisions were good. Crap, I didn't want to do that. Let me pull this out of the way. Sorry, guys. Yeah, I mean, that was a good number. Euro's coming off a little bit. The dollar yen's not as responsive as we thought, but man, if you were coming in today, which I was, just FYI, I was coming in today thinking, okay, the Fed's going to come in, they're going to be a little bit more dovish. Now, I got a bunch of comments from the guys and gals in the chat room saying, well, how's the Fed going to be dovish? We've had pretty strong numbers, and if they come in dovish, then that just suggests that the Fed is just doing whatever Trump wants them to do. Obviously, Trump paid the Fed a lot of lip service yesterday, saying that the Fed should be cutting rates, and if they were, the economy would be skyrocketing. There were some tweets that were saying something to the effect of that. So if the Fed is indeed a little bit more dovish, is it just the Fed bowing to Donald Trump? And that's the idea. So I I'm just looking at inflation data, and inflation data continues to be a drag, and we're not seeing a tick up in inflation, at least the way that the Fed calculates it. She in our chat room was saying, well, maybe if they just changed the way that they viewed inflation, it'd be much different. True, but they're not. And so the fact of the matter is we've got to go by what they're looking at for, inflation data and how they're factoring in inflation, and they still see it as a drag. And so I think there is the ability for the Fed to continue to be, or to signal a more dovish shift than they already are. The market is expecting the Fed to adjust the interest rate on reserves by 0.5 basis point, which is to be expected right now. However, if the Fed continues to be hawkish, then we have a situation where the euro dollar has rallied right up to the 618 retracement, at least really close to the 618 retracement, and then from here would be a good risk reward to be on the short side. I'm gonna tell you right now, I am going into the FOMC today flat as a pancake, with positions. I have no positions on. I was short the euro yesterday, took my losses yesterday afternoon. I was also long the Aussie New Zealand, which I did really well with, and basically took my position off most of it last night. And I'm actually looking to buy the Aussie New Zealand again on a dip, to add back to get more aggressive on the long side. But as far as like dollar trades, I'm flat, and I'm going to be flexible today. So what I'm looking for here is really this 112.60 level. This is really critical for me as far as a do or die level. I was talking to one of our guys over at the Gelos office yesterday, and we spent a good 45 minutes on the phone yesterday talking about the Fed and the implications of what the Fed's going to do today, and then we were talking about positioning. Institutional positioning is pretty flat, and if you look at like the daily sentiment index, the DSIs are still have pretty bearish reading, but the markets and banks or when I say the market, I should say banks and institutions are basically neutral, the euro right now. And so I think personally, I believe that that retail is still probably pretty bullish the dollar. And I think, and you know, retail sentiment is pretty easy. When you take people, you know, the average person, somebody who's like me, or maybe somebody who is a fast money CTA type of trader, they're, you know, they might be stuck on the wrong side of the market right now, playing, you know, the euro dollar breakdown. It's come up in their face and they're holding on. And their thought process is pretty simple. It's this: I still got a short euro dollar going, and I'm just waiting on the Fed to bail me out. And if the Fed doesn't bail me out, I'm going to have to cover. All right. From a institutional standpoint, it seems like positioning is fairly flat. And the gentleman I was talking to yesterday, he was talking to a lot of his friends at banks, and that's where he's getting his sentiment too. And if you look at the CFTC data, you know, positioning is relatively flat, relatively neutral at this point. So I believe that if we break above the 112.60, there is scope for upside. Now, does that mean that the euro can go to 114 and change? No, I don't. I'm not actually even considering that. I'm actually looking at the euro more of we get above 112.60, we might be able to squeeze to 113 and change. But I don't believe that, like, we're looking at a euro dollar going to 15 or anything like that, at least not right now. But let's note that not only the 618 retracement resides there, is the 38% retracement. So you can see this right here. You can see how huge this resistance is. It's enormous. Okay, it's enormous. So this is really a big resistance level for the euro, and I believe that as long as we are below this 112.40, 112.50 level, the risk right now is to the downside. Okay, the risk right now is to the downside. And today, following the Fed, if we get above 112.60, then the risk is to start to squeeze. I am willing to react at this point in time. I'm willing to react to the Fed rather than being preemptive in my trading today. Like I said, I was fortunate enough to book some profits in the Aussie New Zealand last night, and I took my losses in the euro. So I'm going into this pretty flat. And now I'm going in with more of a reactive state. If the Fed is super dovish, and it seems like they're signaling that we could be looking at rate cuts moving into the remainder of this year, I'm willing to buy the euro dollar on a breakout. But I think the market is expecting a dovish Fed. And if the Fed is steadfast today, did I say standfast? Steadfast today, and they seem, you know, like they're you know, thinking that the economy is going to continue to stay pretty resilient, then you know, the euro, this may be a really good place to be on the back on the short side of the euro dollar or long dollars. The market is, and you guys know this because you've heard it not only from me, but you heard it from everybody else too. The market is very good at inflicting the most amount of damage at any given time. The market got really bullish the dollar, and let me take you over to the dollar index. The market got really bullish the dollar going into late last week. Early this week, those dollar bulls got taken to the woodshed, myself included. I'm one of those people. And now, as everybody is saying, oh man, this is a false breakout in the dollar, you know, let's go ahead and start shorting the dollar, I would not be surprised to see the dollar index go right back to here and we end up closing near our highs of the week, or trend highs. I would not be surprised to see that, you know, and especially if the Fed is just stand fast. steadfast, excuse me. Now, there's some things that worry me about being a dollar bear, and I'm going to just cover them really fast before I switch it over to Steve and Stelios. Look at the Aussie dollar. The Aussie dollar has not been able to take out this 38% retracement. I woke up this morning thinking, oh, Aussie's going to be well over 70.70, and I wasn't long the Aussie dollar. I was just got up this morning thinking, all right, Aussie's going to be above the 38% retracement. And I'm going to have to start buying dips here. I figured I would get up this morning. Looks like China, U.S. trade negotiations are making progress. I thought I was going to have to get up and start buying dips this morning in the Aussie. But I woke up this morning, I'm like, whoa, wait a second. The Aussie hasn't broken out yet. So you got the Aussie that's not breaking out. So again, this is not signaling dollar weakness just yet. You got the dollar yen, which the dollar yen is holding up really well around this 38% retracement. I was thinking yesterday as we broke below this 111.30, we were going to be trading much lower in the dollar yen. It's still not there. The dollar is still holding up, and it's pretty resilient. So I think it's a little early to be really bearish the dollar. We really have to see the Fed show its hand today. Okay, so let me just wrap up by saying, while we are below this, see this pink line here? Let me just make it a little thicker. And it's obnoxiously pink, which I'm not a big pink fan, but I'm just making it obnoxious, loud, big, so you can see it. While we're trading below this pink line, I don't think there's any reason to be bullish the euro. We get above it, then you got a different story. All right. So I need the Fed to basically show us that they are extremely dovish today. And if they do, I am willing to buy the euro. But until then, I'm a little skeptical about this little bounce that we've seen over the last couple of days. Hope you guys are understanding what I'm saying this morning. Hope you're following what I'm saying this morning. And with that being said, good morning, Steve. Welcome back. How are you? Good morning, Stelios.
You know how sensitive I am, Blake. I'm having a hard time with your, how you feel about pink since my last name is Pinkert.
Yeah, well,
I'll get over it.
You're a little fruity tooty. Most guys that sing the way you do are a little fruity tooty. So just kidding.
Don't get Steve too excited.
So Stelios isn't here this morning.
No, he's not going to be with us.
Oh, okay. Well, we got you back, Steve. So how was your trip? How was your trip away?
It was nice. Some mental, recharge for sure. Absolutely.
Good. Well, as far as I go, if I sound a little tired today, I am. We had a baseball playoff game last night for my youngest son. He's in the majors for Little League, which it's quite fun to watch at these ages. They're very talented kids, and it's not like quite like watching minor league baseball, but they're good. It's pretty competitive and pretty good. It's playoffs too, and unfortunately we lost the playoff game last night, but the game started late, so I didn't get home until 10. And then by the time I fell asleep, it was probably like 10:15, 10:20. And then so 3:15 this morning rolled around really quickly. And so if I sound a little groggy, I am.
Don't worry about it, mate.
Blake, I'm just curious.
What's that?
How'd your son handle not winning?
He's probably one of the most competitive people I've ever come across, and he's only 11 years old. He does not take losing well, but it's double elimination, so we still got another shot.
Well, the apple doesn't fall far from the tree.
No, you know what? I'm actually not a super competitive person.
But
my wife, on the other hand, she is quite competitive. So
okay.
She's a monster. Anyway, all right, guys. Well, hey, I'm gonna pass.
That's a Greek part in her.
What's that?
That's a Greek part in her.
Yeah, it probably is. All right. So just I'm going to pass it over to you. Good luck today for FOMC, guys. I'll see. And if you want the rest of our analysis, or at least my analysis, it's on the on ForexAnalytix website, and then plus you'll see me in the chat room there. I'll be there all day. So you guys have good luck today for the Fed. And Steve, welcome back.
You too, Blake.
Thank you.
All right. Thanks, guys.
A nice one.
Hey, Steve,
So-
before you get started on your rundown, do you have any more fill-in news on what's happening in Venezuela?
No, not really. I haven't,
Okay.
had time to read on anything. Like yesterday night, I was traveling.
Oh, that's
Tomorrow
right.
morning, I had to take care of some stuff. But as I told you yesterday, I mean, my expectations are very solid in what's going to happen now. It's
Right.
just the timing that's missing. But I have absolutely no no doubt that the outcome is going to be that, this regime is going to be, overthrown sooner rather than later. And, something more Western world friendly is going to come in place. Probably we already know the guy.
You think China and Russia are just going to go quietly into the night with that kind of outcome? They have boots on the ground there.
You know how it is. There's always some contest and some competition, but I guess US has an advantage due to proximity as well, and
Okay.
who knows? But as it seems, I think in this case,
A powder keg to me.
yeah,
All right.
exactly.
It's not just a meeting at the UN. So anyway, okay, bro. Yesterday we had a nice pop in crude. Was that enough to start nibbling?
If you remember, actually, yesterday.
Oh yeah, you got short last week.
Yeah, I'm short crude anyhow. But if you remember, yesterday crude was at the highs during the webinar, and I said, and for those of you that read my blog post on Sunday night, or even if you read it on Monday, this is exactly the high was the level I was hoping for to catch a rebound because when I wrote that, it had already broken down. I already had a position.
Yeah, that was the old breakout that it rallied back to.
Yeah, actually, speaking of which, if we go to the blog.
Whose website is that? Boy, is that cool looking.
Yeah, it is, isn't it?
Who are those guys?
It is. So this is the free blog post. It was about crude, and somewhere here it is. That level was indeed hit, but soon after we got excavated reduction, there we got a break below previous resistance. Okay, what happens from here? A move below the channel, and $62 opens the next downside target, which is the confluence of supports at 60.70. And after that, a horizontal support area, blah, blah, blah. Any rebound towards 64.50 will be a great risk-reward selling opportunity with a stop above the highs.
Yeah.
So
perfect.
I was looking ideally for a rebound towards 64.50, and here it is on the 4-hour chart.
We got to 60 something.
64.60, right?
Yeah. Well, can you clean it up? Can't you be a little bit? You were off 10 pips. Come on, man.
So you see why I was looking. You see why I was looking at that area, because it was a previous area of resistance. So I said that ideally, if we get lucky, for people that didn't already have a position, we might see a rebound towards that area once again, and a rejection from there. So check box on both of them. We did see a retest. We did see a rejection. Now what I'm missing here, what I want to see, is a continuation lower. Okay. And I do think that even if this is a corrective move lower, which is likely, you always have to treat any counter trend move as a corrective move until it proves to be something else. But given the impulsive nature of this small drop lower, I have every reason to believe that even if this is a corrective move, it has at least one more leg to run lower. So having a look at it on the 4-hour chart, you can see that even if we get just one more push lower, I think that we can easily retest this $60 area. It was previous resistance. So obviously somebody that followed my advice there, shorted at 64.50. There was a nice $4.5 downside by risking literally just 2 So we're talking about a risk reward a little bit better than 2-to-1. I would take that any given, on every
top
given
shelf
occasion.
analysis, Steve. Nice.
Thank you, coach. You can predict the future, but what you can do is make a plan. If that plan also mathematically makes sense, follow it. If you keep doing that consistently, you can consistently perform well in the markets. By consistently performing well, it doesn't mean, of course, that you will be winning every trade in a row, because that's absolutely totally impossible. But it means that you can be,
I've seen Notes for Volgi predict the future here at in Phase for a few years. Anyway, Notes for Volgi's pretty good analyst.
That's what I try to be. That's the situation with crude. So far, crude is playing perfectly to the plan. So I have nothing to add there. I mean, it looks good to me. Actually, I'm still happy being short. I'm in the money, and I'm happy because, as I told you, I had a specific plan in place. I know why I made this plan. Nothing has changed, so I have no reason, to change the way I view this market. So let me see if we have any questions. Some questions about ADB, buy strong dollar. I think now, having to do with the comment buy strong dollar, I'm 100% in agreement with what Blake said. So there are almost always two ways to view the market. Okay, so in the end of week analysis that I posted, I actually showed this chart on the daily. Okay, so at the same time, somebody can read two different things in this chart. On one occasion, you can just focus on the fact that we broke above this wedge. Okay, this ascending triangle. You can call it whatever you want, which was a bullish breakout to levels that we hadn't seen since exactly 2 years ago, almost exactly 2 years ago. I mean, from May 2017, middle of May 2017, and we're now May 2019, so like 2 years. But on the other hand, we had this ascending channel, which we hit resistance and we pulled back. So now everybody has started, calling this a false break higher. Is it though? The answer to that is quite simple. It can be a false break higher, but how do you confirm, how do you verify that this was a false break higher? Do you do that just by seeing that we moved above 97.70 and now we're back below it? No. Why? Because yes, in the very, very short term, you can call this an initial attempt to break higher, which failed. But have we really failed? Have we really invalidated this uptrend? Absolutely not. Why? Because we still have, going back to February 2018, so in essence, going back almost 15 months, we still have a series of higher lows, which is the definition of an uptrend. So what would I need to see here to then say that, yeah, that break above 97.70 was a false break higher, and now it has major bearish implications? I would want to see this ascending purple trend line support break to the downside. Then, and only then, we can start talking about a technical event that includes a false break higher from a major resistance zone. Okay. Now, having to do with expectations about the Fed today, I have absolutely no idea. I can tell you one thing for sure, and that doesn't mean that I cannot be wrong. It's going to be very, very hard for the Fed to make a more dovish case than it has been recently making. The economic data have somewhat improved. The vast majority of the stock indices are at all-time highs or almost at all-time highs. Now what Trump says, I don't think they can really be impacted by that, because if they can't really excuse it one way or another, Trump might be asking for rate cuts and quantitative easing, and I don't know what else. But if they have no way of actually making a case for it, they're not going to do it. And I don't think, since we know how stock dependent they are. They can't really make a case for it with stocks being Nasdaq, S&P being at all-time highs, and the rest of the indices being, almost there. So I do think that the danger today is for a more hawkish Fed than expected. So I have to say in advance that, my feeling is that going short the dollar for this FOMC meeting announcement is a dangerous proposition. That's what I think. I know that a lot of people might have already been taking these positions, thinking, as I said, that this is a false break higher, but I want to see more. And, until I hear the Fed being more dovish or as dovish as the market expects, I find it quite hard to believe. I've seen stranger things happen in the markets, undoubtedly, but I don't think so. I don't think so personally. So I would still not abandon the dollar bullish thesis in the near term, and that comes from a person that you've heard me say time and time again how bearish I am the dollar in the longer term, right? And for various reasons. One of them being that the U.S. wants a much weaker dollar than it currently has. Okay, so that's what I think about the Fed today. Now, of course, all that are is just a bunch of thoughts, and we have to see what happens in action. Coming back to the USD yen being one of the most sensitive to this kind of developments, keep in mind that 111.50 has acted multiple times as support resistance. We're currently there, but in the grand scheme of things, no matter what happens from here, it doesn't really play a role. Why? Because bottom line, what all that matters here for the USD yen is what happens with this long-term symmetrical triangle. As you see, we've been in a symmetrical triangle since the middle June of 2015. So almost 4 years that the USD yen has been consolidating within this large symmetrical triangle, which after 4 years has compressed significantly. Its maximum range now is roughly 450 pips. So we're getting closer and closer to some kind of a breakout. Now, until that happens, I think that it's just range trading, right? So selling the USD yen as I was advocating while we were riding these previous ascending channels, support as resistance, being short as close as you get to this triangle's resistance makes sense. Being long as close as we get to this triangle support also makes sense. Now, of course, you can keep range trading it until it finally breaks out. And when that happens, after 4 years of compression, I think that the chances of a genuine breakout and the follow through are very, very significant. So, in my opinion, you shouldn't take a breakout whenever that happens lightly. You should probably, pay close attention to it. And if you don't want to buy the breakout or sell the breakdown, you definitely don't want to try to fade it. That's my point of view. Now, I just want to show a couple of things that I mentioned yesterday, but I didn't have the screen, so I don't even know what Blake drew on the screen because I was just giving him instructions. One is showing crude on the daily chart. Keep in mind that we're still riding this ascending channels support. So once that breaks, and if it breaks, that's going to be a significant breakdown. So we might get more downside than people expect. 60 is going to be probably conservative target that I gave before. The other thing is what I was saying about silver, and I want to focus on silver because having the FOMC today, there is a big chance, and being now in such a tight range, you see this descending trend line resistance and this horizontal trend line previous resistance currently acting as support at 1480. We've now compressed enough. This range is like roughly 20 cents of the dollar. So there is a very good likelihood that we're going to break out even today from here. So keep that in mind. I think that silver has been compressing between those two trend lines, and when it finally breaks down or breaks higher, it should accelerate to whichever direction. So I do think that paying close attention to silver makes sense. Also,
while you're on metals, Steve, how about
Absolutely.
copper? Okay.
I have no idea with copper. I mean, I have no idea. I do have an idea. Obviously, we kept failing and failing and failing and failing from this resistance. Now, have we really broke down from this previous ranges resistance?
Getting ready to.
We're getting ready to. You can redraw this a little bit like this if you want. You know, depends on which weeks you take into account. But I can tell you one thing for sure. A move below 283, 284 is probably going to constitute a nice.
Would you buy it against this blue line right here?
No, I'm not.
Okay,
I'm actually not going to do anything. I would be buying it. I would be buying it if it had spent less time consolidating, because while it was still consolidating after just a little bit of a pause, then I had every reason to believe that a bullish breakout was imminent. Now that it has spent so many days and so many failed attempts to break higher, the chances of a failure have increased significantly. Okay, so I have to take that into account. Now, the only thing that keeps me from being a bigger believer in a failure is the fact that the RSI is still looking rather constructive. I mean, you don't see RSI. We had an overbought daily RSI reading, and then we had a very orderly pullback in the RSI. In general, staying above 40, which is bullish behavior. So, that keeps me a little bit at bay. That's why I wouldn't probably be selling it. But definitely, I don't believe in the upside strongly anymore to be involved with it after what has happened. Now, the other thing I was mentioning the other day is palladium, an impulsive move lower. This looks to me like a nice correction to the first leg lower. So keep a close eye. A drop below 1350 opens the next downside support, which is the 1264, 1265 horizontal support resistance area. It looks to me quite a nice continuation pattern, this one, as long as it doesn't get too much prolonged as it happened with copper. But currently, I have to say that palladium looks nice. It looks like a breakdown is imminent. So confirmation, and you're good to go for another probably $100 of downside. It looks on the chart like not a lot of room to move, but think about it. It's $100 of a move, right? So it is rather significant. Now, another one that might prove to be more or less like copper is platinum. Platinum was consolidating in this rectangle, from June 2018 until April 2019, this year that it broke out. Now, after breaking out, we've been consolidating above this rectangle support for a period of several days now. I expected this pullback to this trend line, and then I expected the continuation higher. It can still happen. It can still happen. But definitely, you don't want to see a break below this rectangle's previous resistance again, because then the situation is going to become quite complex. Probably if that happens, palladium is also at the same time going to be breaking down. Silver is going to be breaking down, etc., etc. So keep that in mind. Okay, let me see what questions we have here. Coach, by the way, if you're still here, do we have an interview today? Let's go to the indices. Now, indices. Ascending wedge still in play for the S&P. We're barely holding it. We keep banging our, the head on a resistance here, our heads on a resistance. But, since it's ascending, it keeps climbing a little bit higher and a little bit higher every day. At the same time, and I want to show you this, by the way, the NASDAQ has the same behavior, another ascending wedge here, the NASDAQ clearly on all-time highs now. But at the same time, look at the VIX. At the same time that both those two major indices, US indices, are moving to new highs, the VIX is diverging. The VIX actually bottomed several days ago, I mean, more than 10 days ago, with that spike down at 11, 1090, 11, whatever it was. And we've been diverging since. So we still see indices pushing to the upside, while the VIX has been pushing towards 14. So this is a divergence to keep in mind. Obviously, the DSI is another one to keep in mind. I mean, the daily sentiment index, which we know that extreme readings act as, here it is, contrarian indicators. Look at this. We've been oscillating at around 90. We had readings, even at 90 plus. So currently, the reading for S&P and Nasdaq at 88. You can see it here. I would be very, very careful because yes, they still look bullish. Yes, we still have absolutely no technical indication that we're going to see some type of a breakdown. But sentiment is too one-sided at the moment. Probably positioning is becoming one-sided as well. And at the same time, we start seeing several types of divergences, and that is something to pay attention to. Plus, even if you wanted to be bullish, how would you buy up here? Where would you place your stop loss? I mean, what would your risk reward be that would justify such a move? So it's quite simple. If you have no position at the moment, you have two options: either finding an opportunity and a technical move to be short, or to stay out of this market. It's as simple as that. Now, another one I want us to have a look at is USD Swiss and Euro Swiss, actually. So USD Swiss move higher from this ascending wedge. You can see it here. Now we're back retesting this previous resistance and support. Let's see if we're going to get another push higher from here. If indeed the Fed today comes out more hawkish than the market expects, we're going to find support here and move to the upside. If not, then we're looking at something totally different. At the same time, Euro Swiss is retesting once again this horizontal support resistance area at 114.50. Keep that in mind because obviously, if Euro Swiss moves to the upside, that's another element that's going to help a possible USD Swiss appreciation. So ideally, the perfect combination for the pair for USD Swiss, to move higher is going to be a more hawkish than expected Fed today, and Euro Swiss finally breaking above this 114.50 area, because if that happens, then the next serious area of resistance is quite a lot higher, roughly at 117. Okay. Hi Steve, I'm looking to shortcut yen on daily time frame today. What do you think of this pair? Please advise. I wouldn't be doing much with it. Do I see the bearish case? Yeah, sure, I do. But I also see the case for a larger consolidation. I mean, look at it like this. If we ignore that spike low, then we have this ascending trend line support, which, as you see, has been acting quite nicely. And you can even draw an equivalent. And we can draw an equivalent resistance trend line here. I think that if you want to be short, it's not a bad idea, but I would want to see a breakdown below 82.60. Okay, because that would violate at the same time both these lows here, this previous spike lows, 80 to 50, let's say, and it's going to produce a breakdown from this ascending trend line support. But until that happens, I think that there is no trade here. Okay, even the RSI says so. Even the moving average says so. RSI currently roughly at 50, 47 to be exact. While, as you see, both the 50 and the 200 daily moving averages show a rather faster one and a slow one are horizontal, which is an indication of no trend. Okay. So if you want to take such a trade, I think a breakdown below 80 to 50 with a stop loss probably about this spike high, because that would assume that we move lower from here. That would be a trade that would make sense from a risk reward perspective. Okay, so if that's what you're looking for, I think that's the approach. Now we have a question about USD MXN. If you remember, those of you that had seen my interview, you know, one of the trades I had given to Real Vision was being short USD MXN when we were actually here. Okay, saying that, you know, we can make it to this zone, even to this ascending trend line support. Now this played out. The question is, would I still be short USD MXN? The answer is no, I wouldn't, because this ascending trend line support, and I'm referring to the longer term symmetrical triangles ascending trend line support. You can see it here. The blue one is moving higher and higher, so there is not much room left to the downside. And you know, this 1875 has proven to be very strong support area. So you know, as long as we're close above, you know, close to this 1875 area, it's hard for me to advocate being short this pair. On the other hand, do I see something that tells me that the pair is about to start moving higher with momentum? Absolutely not. I don't see anything like that. So I think there is no trade here at the moment. Okay. Now, there will be potentially an amazing trade here if for some reason we plunge lower and we break below this trend line, because then we're going to be talking about a huge technical event, right? That's going to be a breakdown from a symmetrical triangle that dates back to the very first days of 2017. So we're talking about an almost 2.5-year-old symmetrical triangle. So you know, that's what I think. Now, on the other hand, a retest of this 1875 gives you an amazing risk-reward ratio to hope for another rebound towards triangle's resistance. Okay, so those are the two options in my mind having to do with the USD MXN. Cat yen, I just covered it, Irina. So I'm pretty sure you were here because I did that like 5 minutes ago. We have a question about gold. Let's have a look at it. I'm still short my last part of the gold short, and you know, quite deep in the money. So I'm not worried about it because I've already booked roughly 2/3 of my position. The question is, what would I be doing with gold here? There is still a bearish explanation here, and it is this. Okay, that this trend line, this was the trend line support, which is now acting as a resistance. But I wouldn't want to see a break above this trend line because then we can start talking about a corrective move lower and more upside, this time towards this 1360 huge confluence of resistances. You can see it here. If I zoom out, you can see why 1360 is extremely important as support. Okay, as resistance. Sorry. So you know, I don't like the fact that gold hasn't accelerated lower. I expected a faster continuation to the downside, and that's why I'm a little bit more skeptical. Of course, as I said, I have the luxury of being in the money and only having a fraction of my initial position, so I have no reason to rush into doing something with it. But I can definitely tell you that I don't think I want to see a break above 12.87. This spike high. If that happens, I would probably decide to book the last part of my position and keep monitoring what's going to happen from there. So to see a continuation lower now, you want to see a break above below 12.65. Unfortunately, we didn't touch the previous time. I had an order to close the last part of my position at 12.65, but we made it to 12.66. Otherwise, I would have already been out of positions. Now, if 12.65 breaks the downside, then you should expect a continuation lower. Otherwise, there's still the possibility, as I said, to retest 13.60. No problem, Spencer. My pleasure. EuroCAD looks bullish. How do you see it? Okay. My pleasure, Irina. EuroCAD. Let's have a look at it. As you see, in the short to medium term, I don't see it as bullish. I don't see it as bearish, because this looks to me like a symmetrical triangle here. Now, we have broken above this triangle, and when we came down to retest its previous resistance as support, we held, and that is something going on for the bulls. Okay, so that's something positive for the bullish case. But in general, the price action here tells me that I want to stay away from it because it's choppy and we haven't been doing really much. I mean, we've held this 156 to 147 range since exactly a year ago. So I'm not eager in doing anything with it. I think, you'd better look at other opportunities out there, much better, and many more better opportunities out there. We have a question about pound kiwi. Before we do that, let me show you pound yen. Pound yen, this is the range I was talking about yesterday. And if you have a look at it on the 4-hour chart, and then I'm going to go to the pound kiwi. If you have a look at it at the 4-hour chart, here it is.
Just want to remind you, Steve, we do have a guest standing by.
Okay. Sorry, coach. I asked you before, but you never answered. You weren't here before.
Oh.
Okay. Okay, very fast then. Pound yen, I'm really interested in this one. A very solid horizontal support area at 144. And I'm monitoring this descending trend line resistance, which more or less confluences now with the 61.8. So a move above 146, nice bullish breakout. A move below 144, nice bearish breakdown. And, a fast look at pound kiwi. Pound kiwi still holding within this ascending wedge. This is the place to be short. If you want to do something now, this is the place to be short from a risk reward perspective. But if we do decisively break above this wedge, then I expect a continuation higher towards this 78.6, which is almost at 2. Okay, so right at resistance at the moment, which means buying it exactly at resistance makes no sense. So either you short it here with a tight stop, or you wait for a break higher, in which case you have a nice breakout to the upside, and then you can ride it for several hundred pips more. Thank you, coach.
Nice job, Steve. Thank you very much. Nick Santiago, my trading warrior brother, welcome back to Face. I'm making you the presenter. Nick is from In the Money Stocks, and there have been plenty of stocks in the money. Stick around. He's a GANist. At least he utilizes some GAN philosophy for his ideas. Hi, Nick.
Hey, Dale. How are you?
Good, buddy. Gosh, how long has it been, Nick?
It's been a while. It's been a little while. I'm not sure exactly how long, but it's been a little bit.
Okay, so I do remember, Nick, and it's always eye-opening for me to talk to you and get your general views on the market. Last time you were here, you were very constructive and right about the market. I think it was transports at the time. People are amazed how I remember things, other people's trades. Forget where my orders are, but I remember everyone else's. So what's on your radar, buddy? And I'm wondering if there's any GAN stuff, I know you pay attention to not just price, but time. So take it away. What's on your radar right here with S&Ps?
So time is more important than price. That's what Gann always told us. And I think we're about to run out of time. So I know these markets have been moving higher, and I've been predicting and riding them up. But at this time, I'm starting to jump off the ship, and everybody is now on the bull train, and I'm about to get on the bear train. So when we get into
what's it going to take? What are going to be the triggers for you? And do you think, first of all, Nick, the magnitude of the recovery from the low late December, January without a pullback, that was pretty unusual. And, you know, I tried to start getting short at 78.6, 61.8, and here we are at new highs. Actually, on the weekly, it looks like a 3-drive formation to me. So it even looks like a 3-drive with what you have up there. So what's going to be your trigger for knowing that we have peaked?
Yeah, so very, very often when you get moves like this and they start to, they get what we call runaway moves. You get breakaway moves. Sometimes the old saying is the best moves come at the end of moves. And, you want to see that ultimate euphoria, and we're getting it now. You have Apple earnings today after the reported Apple's trading up. Everybody's getting, wow, the market can't go down. The Fed today is going to come out with their statement. Most likely they'll be dovish. Many people are thinking now a rate cut is in the works, and I think there is also, but I think there'll be a rate cut coming in September, not coming right away now. I think the Fed funds rate will get we'll see a cut probably in September or so once the market gets jittery again. Right now, the Fed really can't cut the Fed funds rate with the market going up. But here's how we're going to isolate a top. You're going to look.
But before you go though, Peter Bookfar says the Fed is not data dependent; they're S&P dependent. So why would they use their ammo up here anyway? They may need it.
Right. Exactly. I agree 100%. It doesn't make any sense to do that. But what I think will happen now when we get into sell in May and go away and we start to see the market tumble, they'll come under more scrutiny and they'll have to eventually cut rates. I think I'm going to go out on a limb here and say September, look for a rate cut. Probably.
Well, yields look like they're pricing it in. I mean, 10 years look like they're going to take out 235, maybe head towards 210 or so, right? You see it that way?
Absolutely. In fact, look at my line here. I already got it going down to 2%. So once we take out this weekly chart, 200 period moving average, that's where the bounce occurred in yields on the 10-year. Once we take that out, 2% should be free fall. And once we get down there, they're behind the curve. They got to cut. They might even cut by 50 basis points. I don't see a 100 basis point cut, but I do think a quarter and then potentially another quarter, and then you get another rally. I mean, let's face it, the rallies only exist because of liquidity, and that's the injection in the arm that they need to go higher. But going back to your prior question, as far as what would give us a top in this market, do you see what we did here on March 22nd? I don't know if everybody can see where my cursor is. We had 122 million shares traded in the spiders on a reversal day, but right here, right on March 22nd. So we had a Fed announcement on the 21st, which happened to be the spring equinox. Markets moved up. Then we sold off the next day with very good volume and never had any follow through and recaptured trend and kept going higher. So now when you see a day like that March 22nd session on high volume and we get a follow through day, the top is in, and then ride this thing out for multiple months. I don't think we're going to get a quick recovery. I don't know the catalyst. Honestly, I never know the catalyst. I just look at the charts and I try to frame it up with the time patterns that I've isolated through mathematics. So
what do you think about this for a black swan? For years, and I know, you look at planets and you talk about equinoxes, for eons, everyone thought if there was going to be another major conflict, it would be, everyone was looking towards the Middle East, right, Nick?
Correct.
How ironic would it be with the way things are lined up in Venezuela with Russia and China having boots on the ground and we're on the other side, that becomes a flashpoint? No one thinks it will. What do you think?
Oh, I think it's very close to happening. I think that's might even be more of a scenario than the Middle East. We've been in the Middle East now forever. So
that's what I mean.
Yeah, I agree. I agree 100%. In fact, I told that to my members last night. I said, everybody's asking me for the catalyst. And I said, I don't really know what the catalyst. I'm usually surprised by the catalyst myself.
Yeah.
But that certainly could be, I mean, right now, it might even be on the top of the list.
I have a question from one of our attendees. He's saying, hey, Dale, can you ask Nick if he's bearish all equities? And I'm assuming, Garcia, that you were asking, or just the U.S. So with that, is this going to be an across-the-board global equity sell-off? Or
across the board?
I know it's going to be different in magnitude, but what do you think?
I think it'll be across the board. I don't think anything gets spared today. I think every market is intertwined by something now. So you'll see that right now the S&P has been the leader, but emerging markets, they're going to come under problem. They're going to see problems. It doesn't really matter. Europe's an absolute disaster. That's going to be problematic as well. So
can I imply from that Nick, you think that when this happens, there'll be a bid in the dollar?
Absolutely. There already has been, right? I mean, the dollar has been super strong. In fact, when we, look at a chart of the dollar versus the euro, which is the most heavily weighted, equity against the dollar. I mean, you could just look at the trend here. I mean, you got a nice little counter trend bounce, but it just continues to go lower. So, the euro might make it up to around 113, maybe 113 and a quarter, and then it's headed back downtown. And that's definitely, I've been a dollar bull. If you remember the last time I was on, I was a dollar bull back then, and the dollar was at a dead low. And I was a dollar bull then, and I'm still a dollar bull today.
What do you say to guys that were looking at this Dixie formation at 97.80 being a breakout, and now we're trading underneath the breakout? Because my problem with the dollar here is it's so crowded, and it's been crowded for such a long time, and sentiment numbers are, euro got down to 9 on DSI a week or so ago. So doesn't it bother you? You have a lot of company being bullish the dollar.
It does, but this is what we've seen. Here's a dollar chart on my right side, and here's what we see with the dollar. It pulls back in, and then it gets everybody jittery, and then it goes back up. And when you look at that bigger time frame, which is something I always tell traders to do, look at that bigger time frame, and you'll see that trend just keeps going up. You get those big flash sells on a weekly and monthly chart, and then the dollar recovers and goes to new highs. When you think about it in a bigger picture, just think about, all you need to think about is Europe. Think about Japan. What do those two places have in common? They have negative interest rates. The money has nowhere to flow but right here. Great
point, Nick. We can't let this much time pass between interviews. So how are you going to play it, Nick? Are there any sectors within the market that you feel are most vulnerable? I'm pretty negative oil now, and even though Venezuela, and copper, which is they're both pretty good economic indicators. Or do you think the high-flying tech sector, like the triple Qs, might be the best short because they were the outperformers?
Well, I have crude. Talking about crude, I have that going up to $68. So once
we have another rally coming.
One more punch right up to 68. We probably go to 68 and a half. Usually we'll pierce my line by a little bit, and then it springboards back down. So I'm looking for crude to get to 68. That's where I will be looking to short crude. Looking as far as the markets go, if you take a look at a stock like Intel, which I own put options on, and I'm looking for Intel to go down to maybe 44 at the least, and potentially even 36. So I think this is, they came out with earnings. The stock's been selling off. You'll get some minor bounces, but select groups inside of technology should get hit pretty hard.
Google has a very ugly weekly chart now, made new all-time highs. Looks like a 3 drive to a top and on the weekly.
And you want to know something, Dale? When you get wide range expanded bars from all-time highs, and that's what Google just did, that is a negative setup. That's an M top in the making. So again, Google's just an equity that could go down to 1050. I know people think that these things can't happen, but we all saw what happened in October, November, and December when these markets start to sell.
Especially December.
Yeah, and just think about this, Dale, which a lot of people aren't really talking about too much. As of late, I've been hearing a little bit about it on TV. But look at the volume really throughout 2019 on the spiders. In the month of April, we don't even have a single day where we've traded 100 million shares. So
what a great point.
When the sell side happens, it's going to escalate. It's going to be like taking the elevator down without buttons. It's just going to go straight. So
Intel, basically, Intel is going to be a foreshadowing of what the overall market's going to be. And, you know, Intel looked great. And in one day, the trend was broken. So, you know, it could be event driven where, you know, one day breaks this uptrend in the S&Ps. But to me, it looks like Intel is kind of foreshadowing what could happen to the overall market.
I think it is. I think you have a market right now that has been going up on extremely light volume, and that keeps me bullish. However, when you get that high volume sell day, that's usually the signal that the markets are ready to turn.
How many shares? What would you consider high volume? Like the
high volume
spike we had in
yeah. So you want to see the spiders go about 120 million shares or more.
Okay.
So when the spiders turn with 120 million shares or more, it's probably a sign that the top is in.
So where do you hide, in the dollar and bonds during this?
You hide in bonds. That's exactly right. You get into bonds. In fact, anybody can do this. If you take a look at the TLT, you had that nice spike up here. It'll probably have one more little downdraft, and then this is going right up to around 134. So, you know, there's money to be made there. If you take a look at the IEF, which is another bond ETF, this is the 7 to 10 year. You've pulled back nicely as expected, and then we could go up to 109. So there's definitely some movement to the upside in bonds. The other way to play it is obviously shorting the S&P or shorting the NASDAQ or shorting any of the diamonds. It really doesn't matter.
How about shorting U.S. dollar yen, which is pretty tightly correlated to yields?
Yeah, I mean, there's possibly a play there, but right now I don't really see this doing much. You know, it's been in such a tight range for now.
Yeah.
I'm a setup guy. I got to really see that chart giving me that real tight setup. So the setup's not there yet, but it certainly could be something.
You know what else you do well, Nick? You get it all said and done quickly, and right to the point. So GAN-wise, what are you looking for as far as how long should this scenario play out? You think we go into late summer or the fall, then see where things shake out for possible values?
That's right.
Things that got cheap.
I think everything will be cheap. I don't know if you were following me back in December, Dale, but I was due to GAN. I got the Christmas low bottom and rode this thing up. We had a little pivot here, which was the equinox. Now I'm looking for a sell in May and go away, and we'll come back in September. See you in September.
Okay. Yeah. Wake Me Up When September Ends was also a pretty good tune. Actually, you know, I want to ask you, that low that we had in mid-March, that was a Bradley date. You have a view on whether or not, do you like the Bradley indicator? Do you use it at all?
I don't use the Bradley just simply because I haven't found it to work more than 50% of the time. So that's my only negative. Not to say that some Bradley dates don't really hit a bullseye. They do. But it's just not, you know, I like things that work 70% of the time. If they work 70 or more, I add them to my tool belt. If they don't, I kind of discard them. Every year I'll take a look at the Bradley models. But I kind of just shy away from it because it's just a little bit tough. So, you know, it's hard to pick out which ones will work. But even here, you know, we had that nice little March sell-off. We had another little March pullback, but you could see the trend was so strong. Traders should always understand when that trend is strong, you might get some shifts in the current, but the overall current is still going up.
Okay. Anything that you'd like to wrap it with? Any instrument you'd like to wrap it with?
Yeah, I mean, right now, when I look at this market, I just want to tell traders, again, just watch that S&P. When you see that thing dip like it did here on March 22nd, and you get a follow-through day, just get prepared. This market's going to be on some real shaky ground And I know everything looks great right now. The flowers are blooming, but we could have some rainstorms and clouds coming into this market shortly.
Okay, Nick, and the best way for people to follow you, this could be a good time for you to show your website if you'd like, and the best way for people to follow your work, which I think is outstanding. You know what, Nick? I've been bearish crude, but after looking at your and did okay the last week or so, I'm getting flat after this interview. Thanks for being here today. I am. I'm going to get flat because maybe if Venezuela does blow, why do I have to be a hero here? I used to always want to be in stuff. A friend of mine said, Dale, you love to hear the ice crack, but you know what? I can't climb out of cracked ice as easily at my age as I could years ago. So I'm just prudence over valor. Thank you, Nick. I think you're going to save me some bucks here. So
thank you, Dale.
Why don't you show your website so people know how to follow you and
pull that right
reach you? And
so members can come right here.
There's Gareth.
We have a blog out here. Gareth is on the homepage. He's a little bit more handsome than me. And
come on.
and then you can just come over to our research center. We have options. We have a day trade room that we do every day. It's been on fire in 2019. And so everything's right here. We have all of our everything that we do. So come on over. We've got lots of content. You see a little article I wrote on Google, and we put up lots of blog material each and every day. So it's all here. Check it out. And
it looks like you have a 7-day trial. Is that for your room?
Yeah, we have a 7-day free trial to the trading room and also to our research center where you'll get all of my reports. I'm under the daily market report, and my partner Gareth does a separate report in there called the nightly analysis video. So you get all of our setups in there, and you'll also get all of my work. Okay,
Nick, my brother on more than just a trading level. It was great talking to you, and
great to be back, Dale.
Yeah, may pips right down on you. And all your followers, and Gareth, say hi to him for me, and
I will do.
Much success, and hey, let's have a good time. Down is faster.
Yes, let's do that. Have a wonderful week. Have a great trading week. Wish you guys lots of success, and looking to be back soon.
All right, everyone. That's my trading warrior brother, Nicholas Santiago. So you can follow him. What a great presentation. I'm reassessing things, and this is why I do this, okay? I'm selfish. I do it for me too. It's intelligence gathering, and that's why I spend time bringing good people in so that you have the edge and can consider more than one side of a trade like we do here at ForexAnalytix. So that's a wrap, everyone. Good luck on the Fed, and we'll see you tomorrow. Remember, don't just count your pips, count your blessings. Adios. See you tomorrow. Thanks again, Nick.
Thank you, Dale. Take care.
All right, buddy.